Welcome back for another top-notch video. This week, guys, we're going to be talking about the week of the 22nd of July through the 26th of July. As always, our channel, Top Notch, is about retirement accounts, TSP accounts, 401k, Roth IRA, and brokerage accounts. For you TSP folks in the military and government funds, we go over the C, S, I, and F fund. For those that have brokerage, Roth IRA accounts, 401k accounts, we go over the ETFs, IVV, VXF, EFA, and AGG. These translate to the S&P 500, small caps, international market, and bonds. On our channel, we generally do a kind of a general overview. We go over a couple websites, kind of what they say for the week, a little bit of news, and then we go into a technical analysis of each one of these funds. Please stick around, write your comments below, and we'll get right into it. So the first thing we're going to go over is, as always, we want to talk about technical analysis. As with this channel, we do technical analysis. With technical analysis, it's important to remember, and just a quote here from Market Wizards, that technical analysis tracks the past. It does not predict the future. You cannot predict the future with markets. You have to use your own intelligence to draw conclusions about what past activities some traders may say about future activities of other traders. So basically, technical analysis will not tell the future, but we can, based off patterns, we can try to get a good probability of what the future will do. That doesn't mean it necessarily will happen or it won't happen, but that's kind of how we do things on this channel. It's important to remember that moving forward. That being said, that we're going to go into what we have for this week. So on this week, for this upcoming week, the last couple days in July, we have the Fed meeting that is upcoming, where they're expected to lower interest rates. Some say by 1/4 of a point, some say by 1/2 of a point. I already think that's kind of baked into the markets for the most part. If they decide not to lower rates, that'll be very, very interesting on stocks. Based off our technical analysis and what we saw from some of our indicators, it looks like they're going to lower rates. So, but I already think that's kind of already in the markets for the most part. So I don't think we'll see a huge jump there. But we have that. And then we also have the jobs report and unemployment rate coming out on Friday's report, and that's expected to be at 224,000 jobs, and the unemployment rate is about to stay about the same, which is 3.7. Now, if we get a jump on that or a lower percentage on that, we could probably see a little bit of market activity there, but some definitely big market movers this week. The markets are going to be looking for these two events on Wednesday and Friday. Now, with our TSP folks, we only have one more move for this month. Since it's the last week for this month, we're probably going to move back into stocks at some point, probably on a down day, just so we don't waste an August move for that. So keep in mind and watch our Facebook and Twitter account for that one move as we're moving forward. So as we were looking at charts, guys, we were looking at what is the case with our moving averages for our S&P 500 or the C fund / IVV account moving forward. Looking at some of the different cases we have cases from 1987, and this is from CCM Market Model. They have their own YouTube channel. You're more than welcome to check them out. We have cases from 1987, 2011, 1998, and 2016. In all of these cases, we saw the basically S&P 500 come up and cross that 200-day moving average, and then move more in a bullish manner off these moving averages for all four of these cases, 1, 2, 3, and 4. We're seeing a similar pattern with our July 25th data that CCM pulled. Basically, we had this chart rocket through the moving averages, get above that 200-day, test it here, and then stay above those moving averages, where we had, in the cases where we had a clear hold, clear and hold, clear and hold, and clear and hold, we saw charts move significantly higher in all four cases. We could definitely see that with charts moving forward. Another pattern that we saw with technical analysis, kind of a general overview, is this data is going all the way back from 2018. We had a 10% correction for that S&P 500, and then we dropped down to almost a bear market, which is considered 20%, but not. Bull market continued. So we had a 19.78 drop with the S&P 500 or the C fund IVV, and then we had a small correction here in June / July of about 6%. A lot of folks say that this could be considered, all the way going back to 2018, a head and shoulder inverse pattern. Typically, a head and shoulder inverse pattern is associated with a bull bullish manner, bullish trend moving forward. So if we can break this trend line here and get above that, that would be very, very positive for our markets or the S&P 500 looking forward. Another good thing about this pattern, as you can see, this shoulder on this side is a little bit higher and is moving kind of in a higher manner versus this shoulder on the left side here. As you can see, we have, a low here, a lower low here, and then a higher low here, higher high here, higher high here. Very good, very, very good for that's moving in a positive direction for markets, guys. So that's kind of our first thing we want to walk over and kind of go over. Now we're going to go over some general TSP charts and some facts of what we saw. So moving into the week. For the week for TSP, we had a positive week. We saw the S fund pick up 2%, the S&P 500 or the C fund IVV pick up 1.5%. We saw our international markets and our bond markets lose just a little bit, and the G fund picked up just a tiny tad. But overall, 2 funds winning, 2 funds losing. And that's kind of what we saw for the week. On a weekly chart scale, basically for the week here, you can see it on a graph. You can definitely see the S and C fund or VXF and IVV really pulling away from those other TSP funds, where those were all probably right towards negative for the rest of the week. Most of those funds were, whereas the 2 winning funds were definitely ahead and doing very well for this week. That being said, as you know on our channel, we are currently sitting on the sidelines. I think we're probably we probably judged that one a little bit wrong. We were kind of waiting for that. How does it look since we got out on the markets? I have this chart here for you. So we got out on the 17th of the markets. We did see a tiny dip here, not enough to get to put our funds back in. And with most funds, we did see just about even, but we did see the C and S fund take off for that. So we did lose a little bit off that. We don't like to lose more than a percent or 2, so we're right around that time period where we have to buy back in. And it is the last week of the month, so we have 1 move. So for IVV and VXF, we'll definitely be looking for an in this week, probably on Monday or Tuesday, when charts dip a tiny bit at some point when they dip for one of those days right before those big market movers on Wednesday and Friday. So although we're disappointed, you can't always be right on all the time, so that's okay. We will move forward. It's okay to be wrong. It's not good to be wrong for a long period of time. So we'll take the short little loss here. We'll make it up some other time, probably later in the year, probably on the backside in the September or October time frame. Moving forward with our analysis, we're going to look at the TSP talk. Tom does some commentary there. As you can see, the C fund or IVV is doing very well. We see it in this blue trend line there. It is way above its moving averages. It's got a pretty solid trend line. We want to see it break this thing here, get up to that above that 320 level, and really start moving. No real concern. Looks good here for the most part. Let's move on to our next chart. The only thing I would say here is we're really hoping to get this PMO line back above our red line there. Kind of even, a lot of indecision there, but with it being towards the end of the month, we have to make a decision to get back in. We can always make more decisions in August if we need to get back out. As you can see with the S&P 500 on a weekly chart, you can kind of see that we have a momentum moving upward here with our red lines. We're hoping it can break out here and continue on this blue line pattern. We might see it bounce back just a little bit, but overall we're above the 3,000 level, which is just great. Very healthy for markets. Looks great. For our S fund or VXF, we're seeing VXF above the line here, so that is great to see there. We saw it go below the line there. It kind of tricked us, and then on Friday we pulled a reversal day, so that was really good. Back above that line. Good time to look into buying this fund. So we are seeing good things there above our moving averages. Fund is looking good. EFA or international markets, the I fund is not. On the other hand, we did dip below that line. We could not get above it. We're seeing a downward trend here. Looks kind of like a bullish flag forming, but I would not take that just yet. We'll probably see it bounce off those moving averages. Not a place to have funds at this time. Fine, looking at AGG, and I want to say that's primarily due to the dollar being so strong this last month. Finally, let's look into AGG. With AGG, we can see that it's been consolidating the last couple months, or this last month, basically. It had a gap it had to fill here, and it filled that gap. We are seeing kind of a downward trend here, hoping to see that break out of that, but as it's starting to trend down, we'll probably see stocks pick up for this next week, so we want to have our money more into stocks than into bonds at this point. If you have questions about that, go ahead and write them in the comments below. What do you guys think markets will do? Again, those are from TSP. A guy named Tom does the comments there. Next thing we're going to look at is Grow My Thrift Savings Plan, another website that kind of does an analysis of stocks. With stocks, as you can see on a short-term trend line, way above it on their trend line, so we're doing very well there. Looking for those indicators to turn up on their MACD line. We are coming out of that a little bit, so that is positive. So we'll have to see what we can do with RSI. RSI is above the center line there, so that's positive. We're hoping we can get it above there. Good time to be in that fund for the most part, based off those technical analysis. On a long term for the C fund or IVV, we're seeing a little bit of resistance here on this top line. Like I said, we want to break that, just like I showed you on that other chart. We really want to see a breakout from that to see a healthy move up from this point forward. As you can see with the indicators on our RSI and MACD, we are above here, so that is good. Hoping to break into that green here. That green would be a really good positive time to see charts move forward, so we're hoping on that. On the S fund or VXF, we are seeing a little bit of a different story. Have not broke that higher high yet, so that is interesting. Seeing some consolidation here, but on our when I show later on our technical charts, it does look positive moving forward. They kind of have two trend lines here, one that's going to the bottom side here and one that's going to the top side. I think I could definitely see this moving up more towards the top side, moving forward for the short-term bridge just right now based off technical analysis. We are seeing the indicators starting to turn positive, so that is a good thing for the S fund. And that's all I really have to say about that. And before we get into our more technical analysis of it, EFA or the I fund, International Markets, had a failed breakout here, a lot of consolidation. Probably see it bounce back and test these averages again. As you can see, the 50-day moving average was moving in a negative light here. We are still above that 200-day moving average, but just not the best place to have funds at this time. A lot of consolidation in here ever since the beginning of the year. Again, another fund that has not broken its highs yet, so we're waiting for that. Indicators are kind of mixed, so just not a good place to have funds at this time. So that being said, we're going to move into our general analysis of all our funds. The first thing we start off with is IYY. You mentioned, well, what is IYY? IYY is a general fund. It's an all market participant fund, so all stocks, pretty much all stocks are included in this market fund. We like to look at it because it's all market participants. You can kind of see some technical analysis of what they're doing and what they're thinking of. If we get the opinion of everybody, we can kind of make a judgment of where we think the markets are going based off probability. Are we always correct? No, but it is helpful. So as you can see here with markets for IYY, we are moving to the top of our indicator off a very long trend line here. That is good. We are above our moving averages, which is awesome. On our technical analysis on a weekly basis, we are positive with the D oscillator, as I like to call it, that bottom one. We're at 3.36, so good there. Blue line above the red line, which is the PPO line above the moving average, which you like to see. Price is moving in a positive manner, and we are within our Bollinger Bands. On a 2-day scale, just a little short-term chart, we did see this moving down. This was concerning to us for IYY with those that we have in our regular brokerage accounts, but also with our TSP and Roth IRA 401k accounts. We moved from 2 weeks ago, or from a couple days ago, the beginning of the week. We were moving from basically a 154 to a 121, and then we had a closeout on Friday to a 122, so we were 0.01 higher on a 2-day chart. That's moving in a positive direction. That's the stuff you want to catch when you want to get back in markets. So based off that data that we have there, we moved into our 4-hour. 4-hour chart is looking very healthy. As you can see, that blue line popped above the red line on the 25th or so, and price reacted very positively to that. The PPO line, the blue line, is above our moving average for IYY, so this is a very good positive time to get into markets and funds. Saw some consolidation back here. We didn't know where that was really going. It decided to move positive. So let's move into our technical analysis of our TSP slash funds that we have. So the first fund we're going to bring up is VXF. VXF is the small caps, or the ETF is VXF. It's small caps, or the S fund. With that, as you can see here, we did break our high here from May. We have that higher high back here that I showed you on those other charts, so just be aware of that. But charts look to be moving in a positive direction. It kind of stayed above that 20-day moving average. We're getting close to this top line here, this trend line, hoping to see it bounce above that in a positive manner. Does our technical analysis support that on a weekly scale? Yes, it does. Blue above red, and we're moving in a positive manner on a weekly. On a shorter term scale, on our 2-day, big positive. We saw some indecision here. As you saw, we saw 152 here with our DO, and then we moved to a 153 for our DO. That's that line in green, the lines in green basically. And then we really popped higher with a 182 on Friday. That's a very positive sign for VXF. Good time to move into that fund. On a 4-hour chart, we are moving ahead on that. A little outside our Bollinger Bands. That's the only thing we're worried about. But good time to jump in probably on this fund. Should have jumped in a little bit earlier this week, but we just we're waiting for that basically 2-day chart to turn around, and it did so. Moving on to IVV, that's the C fund. We are at the top of that limit. Really want to see that thing break out. Had a great week with that. We are above our moving averages. Seeing kind of this flat 200, hoping to see that move up in the future. On our IVV basically chart here, we see it moving higher on a weekly scale. DO oscillator is doing well. Blue above red. Price is moving higher. Good there. Little caution for concern here. We're still moving down on a 2-day chart. We're at a 1.0 on our DO oscillator. Could possibly see that turn around. Blue line is still above the red line, so that is positive there. On a 4-hour chart, very short-term chart, indicators are moving higher. So we're seeing good stuff here from IVV and VXF. Good time to be in those funds for the most part. Moving on to our other funds, EFA. Like I mentioned in our kind of broad overview, we're seeing some trouble here. Seeing the indicator that price move in and out of this moving average, that's not healthy. It's not good. We want to see it stay above our moving averages, so that's concerning. We are towards the bottom of our trend lines here. If it decides to move through those and bounce off our 200-day moving averages, that will be a negative, not a place to have funds at this time. On our technical analysis for EFA, as you can see on a weekly scale, we are having a lot of indecision, just not as clear indication as our other two funds. We did actually see the weekly move down by 0.02 on the weekly scale, so that is a bit of a concern. On the 2-day, the 2-day is moving down, blue but below red, not a place to be, and on our 4-hour scale, we are negative. So not a place to have funds in EFA at this time. We'll have to try again some other time. A lot of consolidation, just not a place to be making money right now. On AGG, we are seeing also some consolidation. It's sitting right above that 20-day moving average, still within our trend line, so that's good. But this fund just doesn't look as healthy as some of our other stock funds. Usually when stock funds are doing well, AGG is not. And on a technical analysis, you can see that we are coming down on our weekly funds. We are still above blue, above red. That's not a place you want to be at with a weekly chart and putting money in harm's way, or in just putting capital in the way of a fund. We are negative on our blue line and red line. This is coming out, so this is a positive, but we need to see more of more positive oscillator on a weekly scale and on a 2-day scale before we'd want to get involved with AGG or the F fund. And then on a 4-hour scale, our shortest term scale, looking forward to just this next week, we're seeing that in the negative territory. So just not a place to have funds right now. I would stay out of AGG and EFA. That brings us to basically the conclusion of our video for right now. Overall, if you guys have questions, concerns, go ahead and write those in the comments below. My question for you guys is, with the Fed meeting coming up, do you think they'll cut rates 0.50 or 0.5 or 0.25, which is a 1/4 percentage, or 0.50, a 1/2 percentage? What do you think? As always, you can go ahead and like, subscribe, or share the video. Our allocation right now is 100% in the G fund. Like I mentioned, we missed out on a percent a little bit this last 2 weeks trying to see if we could catch markets. We did not. We don't want to stay wrong, so we're going to probably be moving that back into the C and S funds this week. Please be watching our Facebook and Twitter account for that move. If we have a red day, that's probably when we'll be making our move. So just keep that in mind. As always, we really appreciate you guys watching. We appreciate your support. That's another top-notch video. We'll see you guys next time.